Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. Well, this was an interesting week in the market. Not only was it interesting, it was historic. After Tuesday's acquittal of the president on all articles of impeachment, the markets rallied. And not only did they rally, but they gapped up on this price action right here. So from Monday, Tuesday, Wednesday, there's a couple of gaps. And while the Russell 2000 did hold this level of support that I drew a couple of weeks ago, there's some signs that are starting to creep into the market that have me a little concerned with regard to the possibility of a pullback to much lower prices. First of which, you can see down here, the stochastics oscillator is showing lower highs, even after the high here was higher than the previous high back in December. That's a negative divergence. Then if you look down here at the CCI, see that? That is a much lower high. Even though this is a lower high from the previous high back here in January, this is a much lower high in the CCI. And today we crossed right at the signal line or the momentum line, and that tells us the sellers are really taking over some of that price action. Now, we're kind of caught between two gap points here. There's actually a gap above the market here, which will act as resistance right there. And then we have gaps below the market right here with the support level even lower. And this gap point right there is still in force. So if you've gone to our website and clicked on the video tab, you'll see that we have videos called market shots. And those market shots are educational videos that show people how to read the signals. And one of the videos has to do with trading the gaps. There's a rule, actually it's two rules I put out. 80% of the time gaps fill, and after they fill, 80% of the time prices reverse. So we could very well stay within this price channel right here. And in fact, now that we're closing below that blue line, that 20-period moving average, and you see the oscillators are moving lower, I think next week we're going to move lower than that and maybe even fill this gap right here. So I'm not going to put a 2-week forecast out. I'm just going to put a 5-day forecast with the end of that line more or less ending on the 13th. And so we'll have to see what happens with the Russell 2000. Keep an eye on the CCI. Once that goes a little bit lower, if it starts to pivot back up, that's usually a leading indicator that the buyers are trying to find the bottom or a key support level. So keep an eye on the Russell there. Now, if we look at the SPY, which is the S&P 500, left my lines on this chart as well. You can see that we didn't pull all the way back, but this too is a gap up in two gaps and successive gaps higher, with this being a doji slash spinning top right at the high right there. You can see that this red candle is coming in on slightly higher volume. Now, as I erase all of these lines, you'll see that volume plays a key role with regard to supporting the price action. So what I mean by saying that is, if we have a red candle on higher volume, it tells us the sellers are getting motivated. There's a gap down here on the S&P that I think will fill right around 326. So my forecast for next week is that we're going to go lower to fill that gap. Again, look at the stochastics is hinging right here. In an overbought condition, starting to hinge, that's bearish. And the CCI, while it just crossed into overbought territory, it quickly reversed and triggered a sell signal right there. When the CCI crosses back down below that red line, that is generating a sell signal. So keep an eye on the CCI right there. Now, if I go right to the VIX, you may have heard me talk about gaps and the VIX as well. We moved up, we tested that resistance, didn't quite get all the way up. But look at the gaps that we're seeing on the VIX. Now, remember, 80% of the time gaps fill. That's a general rule for equity stocks. But when it comes to the VIX, 100% of the time gaps fill. So not only do I think this gap right here is going to fill, you see that low and then a gap down right here. I think that gap is going to fill next week, and I think it will even go so far to test the high around 20. So this is my forecast line for the VIX. Now remember, the VIX is inversely related to the S&P. and you can see that the CCI is starting to hinge up right there. So once it crosses over that black line or the zero line, momentum line, then that could mean higher prices for the VIX. In turn, that would mean lower prices for the S&P. Now, if we look at the Qs, more or less represents the tech sector, QQQ. Same story. We had gaps below the market. We did not go all the way down like I thought we would here, but I'm going to erase all lines. I'm feeling a lot more bearish than I did last week, and this gap will most likely fill on the Qs right there. So that's going to be my forecast just like that. You can see that this is a doji right there. It's like a cross. And you can see that the stochastics is hinging down. That is negative. And you can see the CCI is also moving lower, almost crossing down here with a sell signal. So keep an eye on the Qs and keep an eye on the CCI especially. Now, if we look at the diamonds, ticker symbol DIAs, you can see that same story. We have gaps below the market. Support down here has held right there, that line right there. But I think we're going to move lower to fill this gap. Let me erase all these lines for you, clean up the charts. And then I'm going to draw a horizontal line. This is going to be my flat line support because, as I mentioned, 80% of the time after gaps fill, they tend to bounce and go the other way. So I'm even going to say that once that gap fills, we'll start moving higher. Again, oscillators are starting to hinge. Overbought here, went overbought, cross right back down. The volume is increasing on the way down. Again, that's bearish. A couple of weeks ago, I released my trading checklist. For those subscribers who subscribe to my TradeLite service, we have a trading checklist. And right now, it looks as though all signals that we're reading on the chart are negative. They're coming in on the sell side. So really got to keep an eye on that because we have a resistance area that looks like it's holding up here, pivot points forming, volume increasing on the way down. We got the coronavirus still taking lives and increasing in numbers, especially with that cruise ship where people are basically stranded on board that ship. And the hype and the concern and the fear will most likely be reflected in the price action. So don't let that scare you out of the market. I do think that there's going to be buying opportunities, but when the charts are screaming sell, 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 I think that's a good idea that you don't go in and rush into new buys, especially at the high. So follow the charts, manage risk accordingly, and we will talk to you next week. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.